following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. You guys, I hope, are aware that the battle in Hofstra tonight, Trump and Hillary, 100 million people supposed to be watching it. I don't even know if that's considering global viewing, but that's pretty daggone good. That's better than the Super Bowl, I think. Insane. Had some down markets overseas last night. This meeting, the oil producers meeting, you guys probably aware of that. Got oil going up a little bit here, a little volatility. Going to stay with oil. Let's just pull that up. I was looking at the CBOE BAT situation earlier. $3.2 billion. Starting to exchange, CBOE bought it for $3.2 million. So here's crude futures. This is the November contract, and getting back above 44.85. Just kind of waiting and seeing here. But really, with the impending news possibilities, I would have thought this thing would have actually kind of bounced a little bit more. So I'm still a little bit more bearish than bullish on this particular instrument. So that's the way I'm looking at it. But again, it's hard to really take any serious stances at this stage unless you're going to do it with a hedged situation on oil. That would be, in my case, maybe, buying the 44 calls down in here and shorten the instrument and hoping, that we get some kind of a decent downdraft. It's going to take a little more in a trade like that, in a hedge like that, to make, start making the points. But the volatility will increase possibly right after the meetings are over and all that. So, you got a chance to look at this in a hedged manner. I don't know if I'd do anything in an unhedged manner, because then, the noise factor is probably going to blow through your stops a lot of times. So again, just kind of trading 101 with options there. Taking a look at beans really quick. We're just going to kind of cover some of the bases that we always cover. This closed below 964.5 or 965, rounded off. Pretty big deal on beans to me. That's going to be your kind of long-term stops above situation. This morning already we reached a high of 960 and some change, backed off a little bit. What did I reach? 961? 960, rounded off. But again, I'm thinking we're going to dive below 944, and I think 915 could be in order on this particular product. That's the way I'm looking at this one. The dollar, not exactly rallying today, but again, very longish in my book on this. 94.90 stops below there. S&P's reacting a little bit to, possibly two things: the oil situation, some of the overseas markets, and of course the political scene tonight. Who knows what kind of fireworks are going to happen? It's almost, you want to kind of cover your eyes sometimes. This thing could go way out in left field, or it could stay in line. But if we use track records for those debates, I'm betting on not staying in line. Sometimes Trump can't just contain himself, and Hillary might say something stupid, and we're talking about emails and racial things and all kinds of. This could get way wacky. Taking a look at the 10-year, talked about this crowding up into these inflection points, not wanting to get short. Again, meeting some targets on the upside, 131.02, and passing those borders after the weekend. Just kind of let the air out of this thing. in an inverse reaction as far as people trying to get short with rate increases, but they pretty much threw a wet towel on top of all that. Let's take a look at gold really quick. And I think Tom and I might be talking this afternoon on his show about some things that are kind of a surprise. Gold, so stay tuned for Tom's show today, as well as all the other shows. Not 1333.31, again, still where I'm kind of placing stops below now that we kind of got above those areas, and that's your support area on gold, in my opinion, on the long-term trade, trying to get back up into 1367. Same situation there. Silver, talked about, the major 1861, and then your new support. If you didn't catch that one, see that little tick down there? This is silver. That's your 1945. We talked about letting the market come to you on the intermediate trade. We've reached a low of 1947 today. That unfair high is 1945. So, again, bounced up a little bit off there. That's kind of your new kind of trailing stop support on the long-term trade from the weekly on silver. So there's silver, and all these prices, levels, what have you, are all in the scanner, and here we go. So there's silver, there's a December contract, and there's the 1945. So don't take my word for it. Here we go. Let's take a look at copper. I've been a big fan of waiting for this to get above 214.05. Still don't see, here's 221.32, kind of reached that POC, top of the mountain. That's the mode of the profile, the most printed volume-wise area of the profile that we emitted that's been enforced on our long-term weekly since first week of August, and hit it and backed off. So, I still think the long-term trade is long on this thing. So, again, 226.18 is your targets up top on it. And the reason I really like this is I like this profile that appeared below price action as we were kind of starting to take off here and get above that 214. This is the profile appearing below price action, and still pretty bullish on copper in general in the long term. On the short term on copper, though, this is kind of your new 240 support area, 218.76. A little bit of noise there and popped above. I really like how this is acting. I'd love to see it compress up into 221.32 again, but you should have some weight off based on it reaching some of those inflection points on the weekly. Here's December corn. Kind of like beans on this one, just settling down here. I think we could cross the 330 border and stay below it. Okay. Let's take a look at Amgen. Somebody's talking about that in the den forum. If there's any pre-market action. We're going to be right back and see if Amgen's printing pre-market here. We're going to take a look at Twitter, too. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I don't think any prints are going off on Amgen, S&P in the den. So we're going to have to kind of back off that for a bit. Twitter bounced up, fundamental news related, obviously. What do you do with this now? This is a stock that, I don't understand completely. Read a lot of articles on this thing. I just can't get my head wrapped around totally how they monetize this thing unless, there's obviously some technical changes going on here. We talked about those, breaking stride for the first time in a long time, going back and retesting that support area there, and then kind of hovering around this area and getting that fundamental pop there. But, I don't know if, fundamentally speaking, I don't know how much, got some overhead, spending some money. I don't know if you guys have some ideas how they monetize it. Maybe you can call in. But, that's a kind of on the smaller scale, there's a friend of mine who runs a little app called Stock Touch. I think they spent $2.8 million development, paying data fees. Bandwidth's kind of cheap these days, but, rated number one this, iOS, iTunes, blah, blah, blah. And, getting ready to throw in the towel. Just can't. The freemium model is scary. If you go out there and say, hey, we've got this great thing and you can use whatever, half of it, as far as software world and mechanisms, half of it, then not pay anything, and then they charge for whatever. And most people, they just continue to sop up the free stuff. Freemium, tough little subscription model when it's all said and done. A lot of times scary. It's actually, you're taking on a lot of risk, and Twitter might be in the same boat. I don't understand. Yeah, well, we'll talk about that after next break. We'll stop talking about Twitter for a while. The financials, and let's go back to the S&Ps just for a second, because we never really expounded on that. With oil, political scene, some of the things going on overseas, and let's hit Shanghai really quick. Shanghai took more of a dive than I was expecting. Here's the weekly on the Shanghai, getting kind of back down below that bounce point, 30.15. So some of those ETFs that we looked at last week possibly getting down below some inflection points. Here's the daily breaking that same area, 30.15, 30.06. So, that's probably in consideration when you talk about technical breakdown. That could be considered below the noise area right there. And we've had some other things going on overseas. The Nikkei coming off again. We're going to reference the yen in a second, but this thing looks pretty heavy to actually probably race down to 15,864 now. And before we talk about the S&Ps, I'm going to hit the yen really quick. And there's those currencies eating up the bandwidth. Here's the yen trade. Talked about this looking heavy and not possibly wanting to buy this area down here on these unfair lows. 134. Again, lower highs compressing down into it. It just, this is the valuation of the yen, which means the Nikkei has to kind of reprice itself. I was expecting a bounce here to happen, and now with this crowding action, I'm not so interested in buying these inflection points down here. So passing until we possibly get a flush out there. Our own currencies before we go back to the S&Ps, the Aussie dollar trade, we talked about new support on this one, 75.87. Still love this trade on the long side. Like how it's acting, especially relative to China. The pound, kind of similar to that yen trade. We talked about this, waiting for a weekly close. We got that below 130.19. Not looking good for the pound. Crowding that area. We talked about maybe passing on the longs on the British pound also. And now you just gotta kind of wait until we either have some new information or we get back above 130.19, in my opinion. So that's the situation on the pound on the long term. There's the daily on the British pound. Get my screen where I can see stuff here. Okay, the euro. Blow this up. I wasn't expecting this thing to bounce too hard off this POC here at 111.43, but again, we talked about waiting to get a weekly close below there. Thank God we did, to start really stepping on the gas on the short side again. That hasn't happened. So now let's go back. Heck on it. My future server just cut off. Let me get that back up, guys. Here we go. Going back to the S&P, so let's talk about this, and let's look at the scanner here for a bit. Kind of a mixed bag. The long-term weekly, as of this week opening, let me just reference that really quick. Yeah, probably going to stay negative, but we talked about 21.58, 59.60 last week. There's these 240s. There was that kind of cross the border. We talked about that being support, and then if that kind of breaks, you've got former support, now resistance. But again, you've kind of gotten down into some lower inflection points here. There's the 2049.75. Not a lot of direction here. Everybody's going to be looking to that oil meeting, and we could churn around here for a little bit. And remember, both the breaths are going to be kind of, positive and negative on the long term, the weekly and the daily. So not a lot of direction here. If you want to trade some bounces, I think you've got something to play around with here on or around 21.49, 21.50. But Yeah, I think we're just going to kind of jerk around here. I mean, there's a lot of uneasiness with that oil meeting. So, taking a look at the XLF. Sorry about that. Here we go. These rates starting to creep up again. The market, pulling back just a tad. You've got this week, and we're going to talk about the prints this morning, but we've got something this week to talk about. Let's go to break, and we'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to hit the XLF and a couple of bank stocks. My favorite company, Wells Fargo, of course. But, I was going into the scanner looking at downtrend stocks, breakdowns, things that had kind of cooperated with the concept of, things that are looking weak on these markets that are on their highs. When the market comes off, they're just kind of easy pickings, things that just kind of go down. We were talking about Kroger last week. I just wanted to reference see how this thing acted. Again, this is somebody, I forgot who it was in the den, kind of asked about this, or maybe we put it on a radar screen. These are the charts in the scanner. This is showing Friday's action. So this morning, don't know if it's got a print this morning, not yet, but I would bet pretty hard that this thing's just going to do a flush below these recent lows. And here's Kroger. Just something was wrong with this thing, and things on the lows go lower, and it's easier to play around with these weak stocks than to try to short the high flyers. So this is another good example of that. Let's see, a couple other stocks that we were looking at. ExxonMobil, let's hit that one. Yeah, this is one that we're just kind of continuing to keep our eye on. Let's just take a look at this in eSignal. These are just stocks in a defined downtrend. While we're waiting for the mouse to spin the wheel here we go. This is kind of wild. How'd that new profile attempting to appear on Thursday, had the new profile Friday. This is Friday's action, 82.73. You had a chance to look at that profile as support for a contra trade against long-term trend north. But, this morning, it looks like we're printing 83.45. So, the oil stocks are obviously going to be looking to this meeting also. And if you're looking to trade ExxonMobil, that would be where you play defense on the downside. Excuse me, if you're going long this thing, trying to play a bounce. But again, I think you got a chance to short rallies up into 85.22. That's kind of the downtrend resistance number on ExxonMobil. A couple of stocks let's look at the XLF in general here. So Deutsche Bank still looking in the face of the $14 billion fine. Germany saying or Merkel saying they're not going to help out in that scene. Why would they? They'll make it back. So here's the situation on the XLF. You got really decent support down here, 1905, 1914, that general area on the XLF. I'm sorry, somebody else's screen came up here. Let me get rid of it. That damn Tom. Here we go. So looks like we're printing 1928 this morning on the XLF. So really big support, 1905, 1915, 1920 on the XLF. I think we probably will meet that this week at least, and maybe even go lower. The good old utility sector, again, kind of getting back above that area last week. This is last week's action. The bonds and the notes climbing, the thirst for yield situation. That's just going to be the way the ball bounces with the XLU. Had some decent, strong stocks in the XLU to not have to try to trade the index itself or the ETF itself on the long side. A lot of those stocks that were hanging in there we're going to talk about in a little bit. But let's take a look at Wells Fargo. Let's see. Looks like we're trading 45.78 pre-market, so a little bit up here this morning, like basically unchanged. But again, trying to, I think this is something where you look at this in a hedged manner. I think this thing could go down, at least another 5-7 points. So this will be something, a lot of the volatility that will happen with this stock because of the news announcements. I mean, you don't want to get shaken out of. That's the way I'm looking at Wells Fargo now. There's that, kind of downtrend resistance area, 47.11 there. And that was coinciding with that 47.45, those inflection points. Let's take a look at Deutsche Bank, DB. Are you guys seeing my chart? Al, confirmation. Okay, cool. Thanks. Deutsche Bank, looks like we're printing 1209 this morning. Okay. Well, some people then are saying they're seeing my chart, so I guess that's all that matters. 1209 this morning. So here's the long term on Deutsche Bank. So, you know, long term weekly profiles almost got back up into that 1579 2 weeks ago, 3 weeks ago, 2.5 weeks ago. And now we're just kind of sailing through these near-term lows. So there's a low there that happened at 1248. Now we're printing around 12. Here's the daily on Deutsche Bank. There's at 1265. So there's nothing down here to even play defense against. I mean, if you're thinking about picking a bottom, I just think that's, you know, like one of those things like buying AIG back in 2008. You know, this could be a $5 stock. You know, look what happened to Wachovia and all that. I mean, those were crazy times, and these guys are basically now paying in arrears type. I mean, they're paying for those times. I mean, this is all a result of that mortgage crisis, and maybe they didn't pay before, but maybe they deserve to be ratcheted down to where those other banks were. Let's take a look at J.P. Morgan. And looks like 6701 printing this morning, so 6777, 6749 weekly and daily for highs. You got to admire these guys in a way. They've just got the math down pat, huh? But trading down a little bit this morning. Obviously, one of the stronger stocks in the XLF. So if you're looking at it that way, you've got to let the market come to you. 66.53 on JP Morgan's a little support area there on the daily. Let's take a look at a couple other oil stocks. Let's go into the XLE sector. Wow. All right. We'll be right back, guys, and we'll look at some oil stocks here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I don't know if you remember this little stock, ENDP. I actually think Tom and I were talking about this about a year ago, maybe. Maybe it wasn't a year ago. But some interesting things have happened here. You know, some technical turnarounds here, getting above that 1939. I've looked at this on the scanner. I was looking for breakouts, and it popped up. And it actually had been. I mean, this is a nice scene when you have, you know, something coming down into the top of the box here, and a profile appearing below price action. This 2003 here on the current profile, and then you get that pop. But let's take a look at the daily. This is the daily, so kind of again got the ricochet move off those weekly unfair highs and then past the daily, and then just some folks started having to cover here. Almost reached 23 and a half. This is our 60-minute here. So, you know, the worm might have turned on this one, might be able to kind of look at this as buying support on ENDP. And FedEx, another one kind of breaking out here. There's support now on FedEx, 168.26. I mean, a company like this plays their cards right. I don't understand how they'd ever lose money, but it's just my opinion. 168.26. Support on FedEx now. We're going to take a look at some oil stocks. Let's take a look at RIG. All right, so, you know, this is one that, this is Transocean RIG. If you guys trade oil stocks, they got the coolest name, coolest symbol. This was one that just hadn't been participating lately, and we talked about, you know, I'm going to blow this up a little bit, breaking down on the weekly and going back and retesting it last week, 968. This is a good example of things don't have to be on sale, and you know, this is one that we've been talking about. If you're going to, you know, sell some weak oil stocks, this has been one of them. And let's see where we're printing this morning, 919. So you got some pretty serious resistance at around 947 and 968. But, you know, keep your eye on what's going on in the talks, and then let's kind of let things settle. And then if this thing starts getting its head back above 968, it could be a chance to start nibbling on it, but just doesn't look good for this thing. Slob. Another one. Close below on the weekly, go back and retest. That happened last week, 77.36. Gave you a nice little trade on the south side there. Again, one of the more weaker XLE stocks. I'm sorry. We're going to take a look at silver. Somebody then who's tardy today. I'm just kidding. Silver we covered earlier, but just to, it's kind of stay the course on the long side here. We're coming down into a daily profile right now, unfair high, 1945. And I understand we'll probably have a new profile here. It'll probably edge higher. So you'll have new support and resistance areas. But remember, this is this stayed in force almost for a month here on the daily profile that's currently in force. So, it's kind of like an exponential moving average. You've got to pay attention to these inflection points. The closer they are to you in history. So I'm looking at this as support on silver, 1945 to pick a battle here, kind of, the breakout and the comeback. This is a let the market come to you type trade, and I think it's a decent little situation for silver to put stops in below 1945. Yeah, I mean, there's definitely going to be some volatility in the energy sector. Let's take a look at crude again. These guys are yapping over there right now. I'm still a little bit more bearish on this. I mean, again, we talked about a hedge trade earlier, maybe like buying the 44 calls and just shorten the current instrument where it is right now. That way you kind of, if you kind of want to pick take a stance on something, have a biased opinion, you've got a chance for, the thing to just go nuts all over the place, and you're just kind of kicking back with the insurance plan. And then if it does fall apart in this instance, you can start playing around with the position. You can start selling some puts against it, possibly way down here. Just get rid of the position altogether. A lot of times it's, rather than complicate the position, if you are looking, if you put a kind of a trade on and a kind of a spread in this case, and it does what it was supposed to do, don't start tinkering with it. Sometimes it's better just to kind of lighten up, take half of it off. Then you got a little bit of a free trade on instead of trying to, get real fancy and cute. If Larry's listening, he probably knows what I'm talking about. Johnson & Johnson, we've been talking about this one. We should have a new weekly profile out today, so I'm interested to see, what the situation is on Johnson & Johnson. I still think this stock's got some downside left to it. We've been talking about that. IBM, another weekly close, third week in a row below 155.97, 156. Gave you a little gift last week, getting back up into that daily unfair high. And I actually think we can break 154 and head lower on IBM now. International paper. This is one I've been following. I really like this trade. I like playing defense below 47.70. Still love it. Let's hit Apple. Oh, Apple's down. We're printing 111.70 or that general neighborhood right now, so down about $1. Here's your support on Apple, 110.23. Talked about that. That's going to be a chance to pick a battle there on the long side if you're looking to do that. But I'm not interested in ever buying Apple right now. It's just I think we can come down, and a weekly close below 110.23 would be just fine with me. Amazon, man, 802.31 looks like it's printing. I agree with you, P. I think that's kind of where Apple needs to just kind of reside, is within that area. Let's pull that back up for a second. There's that 105.5. That was a big number, and there's the 110. I fully agree with that, P. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
So here's Amazon. I purposely go out of my way not to order stuff from Amazon. It just feels wrong that everybody else is at the mercy of these people. I was trying to order new things for my razor, electric razor, the other day. It's like every daggone ad was go to Amazon. So, you know, runaway freight train again, talked about not shorting this. Here's a short-term support and resistance, 797.83 support on this, and then 805.89. That's the situation on Amazon. And, you know, until we start breaking 797.83, there's really, I mean, you know, just it's terrifying to try to trade this from the short side. I suggest not doing it, and just going along with the flow. Buy support, buy support. Here's Facebook, 126.32, big support on that. 127.60, even in the face of the ad situation or in the numbers and the who cares, you know what I mean? I mean, where else are you going to advertise to get the most bang for your buck? Who cares? Talked about being able to buy this 126.32, 127.43 area, that DMZ, and just defended it quite well. Actually hit that pre-market, 126.32. Yeah, it just doesn't seem right, the Amazon thing. It's, I mean, talk about, you know, Standard Oil and all. I mean, that's kind of crazy. AutoZone. I'm actually looking for this to get back above 749.32 and just kind of race back up to 780. So I'm not a big, huge fan of shorting AutoZone. Got an email about that one. Just to wrap up, got a couple of minutes here. Gold, still love this trade from the long side. Have loved this trade from the long side. You got big, massive support, 31, 33, 35. And this, last night, this morning, kind of defending that area again. And dollar getting a little bit weaker. Gold's not complaining about that. Oil volatility, uncertainty. I think you got to watch out short in gold. You got to block out the short side. In fact, here's the dollar. Still 94, 91, 90, still support on that one. Apple, we just talked about. We're going to take a look at Netflix. Yeah, I mean, it just doesn't, Amazon is just, I'd rather go to the local hardware store and just, get some advice, maybe pay a little bit more, and then go to Walmart and just, it's just the same situation. Try not to order. I try not to order anything online that I can get locally, actually. 96.80. This is Netflix. So you got 96.18. This morning you traded 95.54. So we talked about just waiting for this thing to get below this 96.18 area that happened. We're trading 95 and some change now. I really think we could get some momentum down into 88.35. Wasn't interested in shorting this thing until we got kind of started breaching those unfair highs on the weekly. So that's the situation on Netflix, excuse me. We're going to take a look at another bank stock. Excuse me, typed in the wrong one. Bank of America. Another Charlotte Goliath. I think they got their windows broken out. Here's the weekly support on Bank of America, 1542 pre-market. So those unfair lows are 1538. So right at support on BAC. Guys, stay tuned for Larry. We'll be back again tomorrow, and enjoy the fireworks tonight.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.